Hello. Today, I will be interviewing the founder of the Miracana project, a web platform that claims to create transparent investment products using the power of artificial intelligence. Hello, George.
Good afternoon, Sam.
Good to see you here. So today we're going to be discussing the Miracana project. Could you tell us exactly what that is?
Yeah, actually this is a platform where we store and collect a lot of financial data and use machine learning models to predict stock currency and cryptocurrency markets.
Interesting. Now, before we get into the details of Miracana, tell me a little bit about yourself. What's your educational background, your professional experience, and how did you get interested in creating something like this?
So actually I'm a developer and a data scientist. I was working for several IT companies and I was developing the backend, high-load backend infrastructure for mobile games. And roughly 2.5 years ago, I started my own project. I was researching for new fintech projects and I found eToro, a platform where you as a trader can copy other traders and so forth, build a portfolio of people, not a portfolio of financial assets. And I really liked that idea. And I thought to myself, wait a minute, what if I can create an algorithm that would take into account all the data from all the traders and being able to predict the rate of return of a newly placed trade based on the past performance of the trader. So I did that. I downloaded 2 million trades from eToro through undocumented API, and I built a predicting model, and it was an XGBoost model that actually got the results that are better than the results of any individual trader. So some cumulative effect was achieved, and I thought that this is actually the future of finance, and I want to be a part of that future. And I started developing the system that would take into account a lot of financial data, not only the data from eToro. And I started developing, and during the first year I was like the only one member in the team and wrote the majority of our code base.
Wow, now that sounds like quite the undertaking. Was it difficult to build such a platform by yourself?
That's true, but what is good when you work alone is it's really easy to assign responsibilities because you are the only one person who is responsible for everything. And actually in the beginning I made some mistakes. For example, I wasted a lot of time trying to find big giant corporation or fund to pitch my idea to. And I would rather spend this time to develop a product. Recently we raised some venture money. And
oh, how much?
It was like $160,000 plus additional money under management of the system, and I was finally able to hire a team, and now we have 11 people in the team.
All right. So exactly what kind of data do you get from these sources, and could you provide an example of a strategy?
Well, first of all, we receive quotes and market data from our data sources, and some strategies are only based on quotes, and these strategies could be applied to many financial instruments and to many time frames. And we have really complex strategies in our system. Some of them has a few hundreds lines of code, some of them has like a few thousands lines of code. But the example of the simple strategy could be something like this. If the price goes up sequentially for 3 periods of time, we generate a prediction to buy, thinking that the price will continue this trend, and vice versa. So, but actually this strategy wouldn't be able to cover a broker's commission. But the beauty of the system is that we still can add this strategy, and during the simulation it will be given a little weight, so it will not be taking much of a part when the cumulative prediction will be calculated. So, and also we receive fundamentals on companies, information about earnings and dividends, news and articles. We receive the data about countries' export-import numbers and GDP numbers. We receive trading activity of other players like hedge fund managers, experts, and traders from different platforms like eToro, ZuluTrade, and Saxo Trading Floor.
All right. Now, I've read that you have 3 different products, one for the stock market, one for the currency markets, and one for the cryptocurrency markets. What's the difference between these products?
All three products are targeted to different customers with different amount of funds under management. And our first product is for stock market, where we predict over 400 companies that are listed on New York and Nasdaq Stock Exchange. And we can connect our system to your Interactive Brokers account and start manage your funds there. That means that we don't take your funds into our accounts, or we don't have a hedge fund. That's because we have a short operational history, and basically there is no company that develop artificial intelligence in trading and has a long operational history. So basically you open an Interactive Brokers account or use existing one, deposit your account, and use and gives us an access key that gives us the right to open and close new positions, but doesn't give the rights to withdraw the funds into another account. And this product will be limited, and only top 200 participants of the token sale who has the most tokens by the end of the token sale will get access to that product. Our second product is for currency market, and we can connect our system to your AND account and use our predictions for all 125 currency pairs that are available there to manage your funds. And to get access to this product, you will need to have at least 10,000 Mira tokens by the end of the token sale. And our third product is for cryptocurrency markets, where we can use our predictions to allocate your coins on Poloniex exchange. And to get access to this product, you will need to have 5,000 tokens by the end of the token sale. And we will be adding new brokers and crypto exchanges in the future. And you as a customer will be able to choose the broker or exchange you like.
Now, how are you different from other investment firms operating in the algo trading business?
The first difference is that the majority of other trading firms use third-party software to write the strategies and to backtest them. And we wrote our own software to do so. The second difference is that in traditional trading firm, they have dozens of strategies, and they manually allocate the capital among these strategies, trying to find a balance. And in our system, we take into account all the strategies at the same time. And because of that, we are able to achieve cumulative effect and some sort of create a super strategy that takes into account all the strategies that we have. The third difference is that in some traditional trading firms, some strategies may stop working and start to generate losses, and they are manually removed and working strategies are connected. In our system, if some strategies stop working, during some iterations it will be given very little weight, so it will not take much part in a cumulative prediction. And the first difference is that we, unlike many other trading firms, analyze all kinds of data. We base our strategies on technical indicators, chart patterns, correlations, other traders' activity, and news articles, tweets, and even Google Trends data, where we have strategies that are based on Google searches.
Well, that was certainly a lot to think about. Thank you very much, George.
Thank you.